Hey guys, here's how to analyze the markets, the financial Deraa way. Very simple, regardless of your experience or inexperience as a trader. The first thing you want to do, go to the daily time frame and mark up the key daily swing levels. So it's usually the prominent levels, just like this one and this one. So what you'll notice about these two key points is once the market takes them out, it usually moves in the opposite direction. So when this level got taken out, the market moved in the opposite direction. When this level got taken out, the market is moving in the opposite direction. So basically, that's the logic. Now, where are other key swing points on GBP USD? We have this one at the top and we have this one at the bottom. So ideally, whenever the market gets to take out this point, it's most likely going to move in the opposite direction. And what happens next after this levels gets taken out? If we go to the 4-hour time frame to build up the 4-hour trend, right? That's all we have to do next. We go on the 4-hour time frame and we mark up the 4-hour trend. So if we look closely, what we usually use for the markup is just two candles, right? So a two candle pullback. So once we get a two candle pullback, we can mark up the high or the low and then start marking up the 4-hour trend. And basically, that is just how to mark up your trend and know the direction your trend is going. So if you fail to use this model, what will happen is that you'll be stuck in this previous bearish trend that was going on, and you'll be looking for sells when the market has actually turned bullish due to the daily sweeping of key important liquidity, right? So with this, you'll be able to shift properly with the daily trend. Now, once you've marked up your 4-hour trend, you want to go to the 30 minutes for your execution. That is for your entries. How you go about that is simply go on the 30 minutes time frame, right? And then once you've gotten a 4-hour trend formed, from this point we had the low to the high to the new higher high to a higher low. So the logic is once price has given us this simple first wave and second wave, that is wave 1 and wave 2, on the pullback you can look for your entry. Now I have two entry models. The first one is if the 4-hour time frame gives us an FVG at the 50%, the point of equilibrium. If price gives us a 50% at the point of equilibrium, all we want to look for is a shift in order flow. We just want to see price give us two engulfing candles and then we take our trade. In this case scenario, the market actually did give us two engulfing candles right here, if you look at it, right? But when we go on the 4-hour time frame, we get to notice that this key level, being this point here, did not have any FVG or inside bar. Let's go on the 4-hour time frame. You'll see that real quick. It was fully mitigated. So you see this region right here. Let me just get rid of this. If you look at it, you get to see this point was fully mitigated. There's no FVG. So trying to catch a trade right here would mean you take stop loss. So simply you stay out of taking that and it simply becomes your liquidity. So let's go back to the 30 minutes time frame. So on the 30 minutes time frame, what we get to notice is since there is no FVG at this point, it's fully mitigated. All this transaction that is occurring here is your liquidity, and you use the unmitigated level being the order block with an FVG formed right here as your entry. And there's a risk entry form and there's also a confirmation entry model. Let me just show you guys the difference between the two of them. So the risk entry model is you just take your SL, put it below this low, that's this low right here. And what could happen is that a couple of times the market could be very, very intense, right? The market could just really push down and you don't know how much it might push before it start going in your direction. So if your stop loss is too small, you get stopped out and it will still go in your direction. So what do you do instead? What you can do is you should just simply wait for the first reaction. That's wait for the market to come into that level, react and engulf. So once it reacts and engulf, now you know that okay, there is some orders trying to protect this key point. So just wait for price to come back and retest that line, and that is just it. You catch your trade and it's going to be a simple process. So you can repeat that going forward, even at this region. You get to just simply wait for price to come, push up, engulf, and your entry will be when it finally comes back to the retest. It will come back and do the retest. If it doesn't, then it's just being a missed setup. So guys, that is just how you can catch your trades easily using the financial Deraa trading model. As simple as that. You can also see it happen on GU once again. After this high got swept, right? You go on the 4-hour, check for a shift in trend, and you just trade that coming downwards. That is all. So guys, catch me, make sure you stick to the channel so you catch my next analysis and be able to improve as a trader. And yeah, drop your questions you have about marking up structure or anything you have in terms of trading this way, and I'll be in the comments and I'll answer them.